For more, let's bring in Ben Emons, founder and chief investment officer of FedWatch Advisors. What was your read from the president's comments today? Clearly a surprise to Kalshi, maybe a bit of reaction in the bond market as well.
Yeah, I think with the latter, it was interesting because Kevin Hassett has been seen as more, I guess, not so market friendly. You know, he's come up with statements about we don't want to use the balance sheet and a bit more conservative on interest rates. Whereas Hassett was much more aligned with the president about these rates have to go down and speak his agenda. So it's an interesting change here because, you know, this was really, I think, the front runner, Kevin Hassett. So as this race sort of evolves, and I understand that Rick Reeder was interviewed yesterday, it's still to be decided. So Bassett said at the end of the day that the president will announce it right after Davos. So this will be, I think, a big deal next week as we see these rising interest rates, rising yields in the Treasury market reacting to, you know, Kevin Warsh currently be the frontrunner.
Yeah, it's kind of surprising because all of the frontrunners seem somewhat dovish. But I guess the difference that the market's been dissecting has been the balance sheet impact between Hassett and Warsh and who believes in, you know, utilizing the balance sheet a bit more. And it sounds like Warsh would be a bit more hawkish on that front.
Yeah, for sure, because he's come out several times saying we've used this balance sheet the wrong way. We've actually given, you know, fiscal stimulus too much of an impetus by using this balance sheet, right? The Fed is essentially giving the government a free way to spend, and he doesn't want to go on with that process. Whereas you take Rick Reeder, he had an interview with Scott Wapner, really talking about like, wow, we can really use this balance sheet and target the yield curve and do all kinds of things. He's a friendly, market-friendly person in that way. I think that's what the market was doing today. If Warsh is going to be the front runner now, it's a different game with the balance sheet.
But Ben, doesn't this really mean that the Fed independence question is now not really something we're focused on? And look, earlier this week, and we see the moves in gold, we can see the moves in the dollar, we can see the moves in all the things that would be sensitive to it, although gold didn't really budge that much today, and that's why one of the reasons why I'm bullish gold. But look, there's no question this was about could Hassett be confirmed. There's no question to me this was about credibility and a lot of people close to the president and a lot of reminders from within his administration and also from within the community that said, no way. And in fact, if anything, Kevin Hassett, it's, you know, less about he's been doing such a great job with the White House is that he's not confirmable. And he's not confirmable at a time when a lot of other Trump policy is critical. And that this week's been all about headlines that are really more geared around midterm elections.
I think you have a point, Tim, because, you know, there were senators out there saying like that the nomination process could be, the confirmation of it could be delayed, because it's the case with Powell now. And that if you have Hassett being too close to the president, that's being seen as this issue about independence, given the case of Powell. So a bit complicated, but I guess the market is trading more about like this next Fed chair, whomever it will be, that's the guy we're going to listen to. And if it's Kevin Warsh, the front runner, and he's more hawkish in his tone, that's what we'll listen to. And I think that's what the yield curve did today. That's why the 10-year popped to almost like 4.23, but the 2-year was a little bit less. I thought that was interesting because it's about the economy. We got good data this week, but it's also about a hawkish Fed, potentially, or at least on the Warsh.
Ben, when you look at this, I always look at the Fed chair being a political person because he's nominated by the president, has to be approved by the Senate, has to go up to Capitol Hill twice a year. So having said that, do you think this is all smoke and mirrors? Come May, the market's going to look at rates, and rates are coming down. Regardless of what's going on with the balance sheet, with MBS, these rates are coming down. So is the market just pricing in that May option, basically from now till May, to lower rates?
That is actually that way, because if you look at the odds till May, they're like 10%, 15%. So the market is priced for that in May or thereafter. This Fed will for sure resume with rate cuts. So that didn't change too much today, actually, in this move. But I think to your point, yes, any Fed chair is by nature political. It has to negotiate or communicate with the Treasury. It has to go to Capitol Hill and win, you know, at least some sort of voice about we're going to raise rates or lower rates and, you know, how it affect the economy. But I think for the markets, it's about if this is an administration that wants to really propel the economy to much higher growth level with all this investment, this Fed cannot stand in the way of that path from the administration's point of view. And if that's the case, then, you know, you're going to get a reaction in markets, right? They're going to say, like, if you're going to lower rates to bring the economy up and bring investment up, long-term rates are actually going to go up. I think that's still the case, though. We're seeing the breakout now on the 10-year, which really got above 420. A lot of people in the market are looking at this saying, like, yeah, this is the first step to a higher yield on the 10-year.
Yeah, and the